Hi, my name is Hafiz Muzaffar bin Juma. I am from class DSC1A. My matrix number is 20DSC25F1025.
Hello, my name is Muhammad Yusri bin Jamal. I'm from DSC 1A. My matric number is 20 DSC 25 1061.
Hi, my name is Lau Chi Chan. I am from class DSC 1A. My matric number is 20DSC25F1014.
Assalamualaikum and hello everyone. My name is Muhammad Kushairi bin Muhammad Tamizi. I am from class DSC 1A and my matrix number is 20DSC25F1043.
Good morning everyone. Today I will be presenting about Zahara Trading Sdn Bhd, which is a retail company that specializes in footwear. Recently, the company has experienced a sharp increase in online sales. To better serve its customer, Zahara Trading has invested in a new e-commerce platform, which is Shopee. However, with this expansion into online sales, the company now faces important accounting issues that need to be addressed. Specifically, there are two key concerns. The first one is how delivery charges should be treated, whether it should be recognized as part of revenue or recorded as an expenses. The second one is the question of revenue recognition, whether revenue should be recognized at the time of checkout or only upon delivery to customers. The objective of this presentation is to provide clear financial reporting advice that ensures accurate and transparent financial statement for the company. Key accounting issues that has been identified. The first one is revenue recognition. The main question is, when should Zahara record revenue from Shopee sales of shoes? There are two possible points of recognition. The first one is point of sale. It is when it is at order and payment. It is when customer pay upfront on Shopee. The risk of this is that the shoes may be returned or the delivery could fail. And also, recording too early may overstate revenue. The second point of recognition is point of delivery. It is when goods are handed to the customers. Zahara recognizes revenue only once the shoes are received by customers. This is more consistent with MFRS 15 and IFRS 15, which requires revenue to be recognized when control passes to the buyer. The second main accounting issue that has been identified is delivery charges. The issue is how to treat the delivery charges. For example, if delivery charges are included as revenue, customer pays RM150 for shoes and RM18 for delivery. Then the revenue shown will be RM168. The risk of it this may overstate sales performance because delivery is not Zahara core business. Now, if delivery charges are treated as an expenses, the revenue recorded would only be RM150 for shoes only. The RM18 is recorded separately under delivery or operating expenses. This gives a clear view of the company through shoe sales performance. The importance of clear presentation. Why does this matter? Because wrong recognition may lead to a serious problem. One of it being misleading in a financial statements. Afterwards, the director may make a poor business decisions. And lastly, we may lose trust from the investors, the lenders, and the auditors. Therefore, adopting a clear and consistent accounting policy ensure a transparency and credibility in Zahara financial reporting.
Relevant element of the conceptual framework. Objective of financial report. The main objective of financial information for Zahara Trading is to provide useful and reliable information about the company financial position, performance, and also cash flow. This also can help investors to access profitability, growth potential, and risk before investing. Lender can also evaluate Zahara's ability to repay loans and manage debt. Other creditors like suppliers, partner, platform like Shopee can determine the company's capacity to meet obligation. Management can also make better decisions on pricing, cost expansion, and marketing in the e-commerce sector. In the future planning, it's easy to track performance trend and also guide Zahara transition into online businesses. Fundamental qualitative characteristic. The first one is relevant. Financial information must be useful for decision making. For Zahara, relevant information would include sales revenue from Shopee, delivery and shipping costs, commission fees charged by Shopee, and online marketing expenses. For example, if Zahara provides up-to-date revenue report from Shopee sales, investors and lenders can access growth potential in the e-commerce market. If irrelevant or outdated information is reported, it would mislead stakeholders. Second is faithful representation. Zahara financial statement must reflect its true financial performance and position, without bias or error. This means accurately recording Shopee transaction, discount, refund, and logistic charge. For example, if Zahara reports its Shopee sales net of platform commission and delivery costs, it gives a clearer, more faithful view of actual profit. Any manipulation like overstating sales or hiding high delivery costs would reduce trust. Enhancing qualitative characteristics. The first one is comparability. User must be able to compare Zahara financial information over time and with other e-commerce businesses. Zahara should present Shopee sales, delivery costs, and commission fees consistently each period, so investors can see trends. The second is verifiability. Different people should be able to check and confirm that Zahara financial info is correct. Zahara should keep Shopee sales report, invoice, and bank transaction slip as evidence, so auditors or lenders can verify the accuracy of reported revenue and costs. The third is timeliness. Information must be available quickly enough for decision. Zahara must update Shopee sales performance and cost report regularly, so management and investor can respond quickly to market trends like changes in demand or delivery costs. The last one is understandability. Financial information should be clear and easy to understand. Zahara should present Shopee-related financial results in simple categories, so even non-experts like potential small investors can understand the financial performance.
Now, I would like to talk about revenue recognition, delivery charge, and disclosure for Zahara trending as it moves into online business. First is about revenue recognition. There are two common ways. First is point of sale. This means revenue is recorded immediately when the customer pays online. For example, like Shopee, the money is already collected at checkout. This is fast, but the problem is Zahara may still hold the rights until the product reaches the customer. On the other hand, point of delivery, revenue is recognized only after the goods are delivered. For instance, when Poslaju or JNT deliver the parcel and the customer receives it. This method is more accurate because the risk and control have truly passed to the buyer. For recommendation, based on MFRS 50, revenue should be recognized when control of goods passed to the customer. So, if Zahara promised delivery as part of the sale, it is safer to recognize revenue at the point of delivery. The second is about delivery charge. There are also two options for Zahara. Option A, bundle into product price. For example, if Zahara sells a blender at 120 ringgit with free shipping, the delivery cost is already inside the price. This is simple, but it reduces transparency. Option B, treat as separate. If Zahara delivers by itself, the delivery charge can be recognized as revenue. But if Zahara used a third party like JNT or Poslaju, then the cost should be treated as an expense, not revenue. It is important that the delivery charge are shown clearly in the financial statement, so investors are not missed and revenue is not overstated. Thirdly, I would like to talk about disclosure and transparency. When Zahara changed to online sales, the accounting policy must also be updated. For example, The financial statement should clearly explain how revenue and delivery charge are recognized. Comparatively figures should be shown. For instance, comparing last year's sales before e-commerce and this year's sales after the change. This helps investor and auditor understand the impact. Most importantly, the explanation should use clear and simple language, not complicated jargon. This way, all stakeholders, like investor, lender, and auditor, can easily understand Zahara's accounting treatment.
Good job, my team. And now is my turn about the conclusion. Number 1, recap the importance of applying the conceptual framework is crucial for Zahara Trading because it ensures high quality financial information. That means reports are both relevant and faithfully represented, giving a true and fair view of the business. It is also supported by key qualitative characteristics like comparability, variability, timeless, and understandability, making the information more useful for decision making. By following the framework, Zahara can prevent misleading reporting, reducing risks such as overstated revenue or hidden costs, which keep financial statement reliable. It also avoids recognition errors, especially in areas like revenue recognition and delivery charge. Therefore, this approach ensures Zahara's financial reports reflect true performance, giving stakeholders an accurate view of the company's financial health in the fast-growing e-commerce sector. Number 2, my conclusion is to maintain transparency, consistency, and trust. Zahara Trading should follow some important steps. First, the company needs to use clear and consistent accounting rules, especially for revenue recognition and delivery charge, based on MFRS or IFRS standard. This is important because if they record this wrongly, the financial result can be misleading. Next, Zahara should give accurate and timely information so that investors, leaders, and others can see the company profit, risk, and financial position. When reports are on time, people can make good decisions, especially in the fast-charging e-commerce world. The company needs to make sure its reports are fair and no bias. This means no fake numbers or hiding costs, because that would break trust and harm Zahara's reputation. In the end, following the conceptual framework will make Zahara more trustworthy, give confidence to stakeholders, and help the company grow steadily in a competitive market. Being clear, honest, and consistent is the key to long-term success. And now, this is the end of this is our presentation in my team. So, goodbye and thank you.